All right, welcome back, Accounting 1 students. We have moved on to 2.5 Mastery Problem. In our prior work, we started with our flashcards, which were looking at the concept of debit and credit, right? And we still stick with our accounting equation, assets on the left side of the accounting equation, so they increase on the left side of the T account. Left side just means debit. Right side means credit. Accounts that are on the right side of the accounting equation, your liabilities and your capital accounts, since they're on the right side of the accounting equation, they increase on the right side of the T account. We then dealt with the concept of 4 different reasons why the owner's claim to the business changed. Investment was one of them. You had 3 others, and they either did the same as investment, meaning the owner's claim got bigger, or they did the opposite of that and made the owner's claim get smaller. That was revenue, had a credit balance account. Expenses and drawing had debit balance accounts, because they did the opposite. They reduced the owner's claim to the business. And we had a whole bunch of these T accounts, and every transaction would have 2 different T accounts, and we'd look at a whole big page, and somebody'd call up, and you'd answer the phone, ring, hi, what's going on? Yeah, can you tell me the balance of cash? And you'd have to look through 3 or 4 or 5 pages worth and 15 or 20 different transactions and say, I don't really know, hold on a second. Let's streamline the process a little bit. So as we look at 2.5 Mastery Problem, it says Vicky Land has a service business called Landscape. Landscape knows they want to use the following accounts. So as opposed to doing 2 T accounts for every transaction, we say, what if we just put all of the cash T accounts in this big one right here? And if it happens to be a debit, it'll increase it. If it happens to be a credit, it'll decrease it. And then we move on and say, let's pre-label it, right? So cash is our first big one, and the next account is account receivable, also draw. And again, debit means left, credit means right, doesn't mean anything more than that. Account receivable is on the left side of the accounting equation, so it increases on the left side of the T account. Next up is account receivable, Josie Levinson. Again, debit means left, credit means right. Left side of the accounting equation increases on the left side of the T account. We got supplies. Got prepaid insurance. Notice that I'm spelling all of these out. We now move on to accounts payable. Make sure the P in payable looks like a P as in pop, not an R by accident. North end supplies, since it's a liability, and it's on the right side of the accounting equation, it increases on the right side of the T account. Account payable, Bethany Supply is the next one. Again, liability on the right side of the accounting equation increases on the right side of the T account. We move to the next column, and we got an account called Vicky Land Capital. Right side of the accounting equation increases on the right side of the T account. Next account is Vicky Land Drawing. It is the opposite, right? It is a reduction in the owner's claim to the business. So it is going to do the opposite, or have the plus and the minus on the opposite side. Debits are still left, and credit are still right for both of these accounts, right? But whether they increase or decrease change depending on whether they increase the owner's claim to the business or not. I move on to sales. Move on with advertising expense. Move on with miscellaneous expense. Rent and repair. And last up are the utilities. I go one by one, I hit transaction by transaction, and in theory, every time I do a change to cash, it's all going to go to this one account right here. All of the increases or deposits go on this side, all of the payments go on that side, and it makes it easier for me to call somebody up and say, hey, what's the balance of cash? Well, add up all of the debits, the deposits, subtract all the payments, and I come up with a number. First up, received cash from owner as investment, $2,700. The transaction was on June 1, so I'm going to put the number 1 and circle it to identify when the transaction happened. Just like I did before, it is a debit to cash. It is going to be a credit to capital. But again, I want to number these so I make it easy for myself to find them and compare them just in case I make mistakes. We'll go blue with the dates, and then we'll just leave green for our transactions. We're not going to do all of these in the video, but at least you'll get the pattern you'll see from there. June 2nd, paid cash for rent. Okay. Transaction on June 2nd, paying cash for rent, ends up being $500. I'll do a credit to cash for $500. Now I go find the other half of that transaction. According to this, it's going to be a $500 debit to rent expense. Finish up, I got to put the 2 and circle it to say that transaction happened on June 2nd. So on and so forth. In a minute, we'll take a look at what the completed set of numbers is supposed to look like. As we come back to 2.5 mastery problem, we take a look at what the finished product is. And here are all of our numbers. And again, you can see all of this in the answer key on Schoology, but as we take a look, here's our cash account, here's our checkbook. And we've got all of these transactions that affect cash. All of the debit transactions are adding to the balance, all of the credit transactions are subtracting. Whatever side you have your debit or your increase side, that's where your balance is supposed to be. And in theory, when we add up all of our deposits, and then we start subtracting out all of our payments, we should have, in theory, more money over here than we do over here. So the balance of the checkbook is, I want to say it's like $5,295, and that's just off the top of my head. Who knows? That's moving on to the proving rule number 1 and 2 of accounting. Same thing here, Austin Golf. We charge $700, or they charge $700. They paid off $5. They still owe us $200. The balance to account receivable is a debit balance of $200. Same thing with Josie Levinson. We sold them $450. They paid off $200. Well, the balance of that account, they still owe us $250. We look at our supplies. If we look at our supplies, we took $300 plus $200 plus $130, because again, they're all on the debit side. That means we got a balance of $630 in the supplies. You'll do this for each one of your transactions, each one of your T accounts. You're going to go ahead and calculate what the ending balance is. That ending balance should be on the same side that the account increases. It's called the normal balance side. And we've already covered that idea. Wherever the plus is, that's where the normal balance is. When it's all said and done, we are going to be able to prove that Rule 1 and 2 of accounting still work. Let's move you to that. Here's our mastery problem. Let's start with the easy one. 5275. I was close. I've got my debit balance of my accounts, right? Now, what I'm not doing is I'm not saying, all right, I got a cash debit of, I don't know, $8,000 here, and then a cash credit of $2,700 here. No. I've got an ending balance of cash of 5275, right? So here's my ending balance of cash. Here's my ending balance of account receivable, right? Here's my ending balance of the other account receivable. And every other account that's got a debit balance. When I add up all of those account balances, I have Rule 2 saying I got $7,780 worth of debits. I add up my handful of accounts that have credit balances, 2 accounts payables, capital, and sales. When I add these numbers up, I have a credit balance of $77.80. When that number there matches up with that number there, I prove Rule 2 of accounting. I come back over and I prove Rule 1 of accounting. I add up all of my assets, $6,630. I add up my 2 liabilities, $280. Normally, if I was in class, I would just let you try and add up all of these numbers and you go, wait a minute, Mr. Clem, my Chapter 1 stuff doesn't work. My asset doesn't equal my liability plus my owner's equity. I'm going to go, yeah, if you add them all up, it doesn't. And then I kind of sit and stare at you with that goofy smile I have, and then you guys go, wait a minute. Do you have to add up all of those numbers, right? Do all of these all increase the owner's claim to the business? And then you smile and go, no, of course not. Drawing is going to decrease the owner's claim. So I take my capital balance of $4,600 and I subtract drawing. Sales will increase, so I add sales and then I subtract all of my expenses. These 2 numbers here, the 280 and the 6350, when added together, will be 6630. In this example, that is the same balance if I add up all of my assets. So in theory, I pre-label all my T accounts, put the pluses and the minuses in. I start plugging in my transactions again. Nothing different than what I did from a you got 1 debit, you got 1 credit. When it's done, it's going to look something a little cleaner, something like this. Go calculate the ending balance of every single account. Then you're going to go ahead and get your spreadsheet and say, all right, let's prove my ending balances. And these accounts have ending debit balances. These accounts have ending credit balances. Rule number 2 of accounting works. Prove that my assets equals my liability and my owner's claim to the business, which went up because of sales, went down because of drawing and advertising. Now I prove Rule 1 of accounting. And I move on with my second practice 2-5 mastery problem.